we have a lot of taxes.
Yeah, we have a lot of taxes too. It's just about, this is what separates poor people from rich people, is their understanding of how to move money. Nothing like, look, you're gonna have your income. Okay, let's call this job slash biz. Okay.
Okay.
And then you're going to have investments, right? But here's the thing, with your income, you are essentially taxed on your profit slash income every year, right? That's if you go ahead, you have your revenue, okay, minus your expenses, okay, equals your income. Okay. So
okay.
This is minus. All right, revenue minus expenses equals your income. Okay. So you get taxed on this amount. Okay, so taxed happens on this income here. Okay. So in order to avoid getting taxed on your income, what you need to do is make sure your profit is lower, right? Because revenue minus expenses equals profit, right? Equals your income, right? So we'll say profit slash income, right? So, and here's the thing, there's layers to this, right? So this, we're just going to say this is, let's go like this. Okay. So let's do this. Okay. So you have, this is going to be your personal side. Okay. Personal side, you're going to have your income minus your expenses equals your profit. And then you get taxed personal income tax.
Okay.
Okay. This is personal. Now you're going to have as well, you're going to have business.
This is like the company.
Yeah, company. And so this is just to make it easier to understand. You're going to have revenue minus expenses equals profit. Okay. And instead of personal income tax, you're doing business income tax. Okay. Now here's the thing. How do we make this income tax number, right? This one, the red one. How do we make this number lower is the question, right?
Yeah.
Okay. The way we make this number lower, we have to make this number lower, right? Because you're taxed as a percentage, right? Your personal income tax might be 30%, okay? It might be 50% tax, right? It might be 20% tax. I don't know what the percentage is, right? But this is a percentage, okay? The tax, right? So if this is a percentage of this, right? Then how do I get this lower?
You need to get the profit lower. You think
exactly.
Yeah.
How do I get this lower? The profit.
You like have more expense.
Okay. You either have, there's two ways. You either have more expenses or you have less income.
Less income? Okay.
Less income or more expenses will bring this number lower, right?
Yeah.
Yeah.
Makes sense? Because if this number is lower and this number is higher, this number will be lower, right?
Yeah. Okay.
So that's how you reduce your expenses, and that's how you reduce your taxes on the personal side. Now, I need to explain something even further. Okay, 1 second. Now you understand personal, right?
Yeah, understand. Understand that's what I need to do. I don't know how I do it, but because if I have money from clients, so I have like profit, in the end of the day. But yeah, you will explain me now. I understand.
So here is here's what I'm gonna do. So remember, your personal, okay, is actually, when it comes to business, the personal should be an expense. Make sense?
The personal should be an expense. Yeah. Okay.
This whole like you're an entrepreneur, right? So your income, where are you getting your income from?
I get my income from like we have a salary from the company.
Exactly. So this is your business, right?
Okay. Yeah.
Business revenue minus an expense. One of the expenses is your salary.
Yeah. It's
Okay,
like this today.
exactly. So this here, okay, this here
Yeah.
is your personal situation. This is your business situation. Your business pays your personal situation. Make sense?
Yeah.
So how do we make sure that we save money on this and we save money on this? It all starts from here in your business. So revenue minus expenses. You need to record lots of expenses here. Lots, because this will bring this number lower. And if your company profit is lower, then your company tax will be lower. Okay.
Yeah.
But at the same time, you need to give yourself the same situation. You need to reduce your profit by reducing the income your business pays you. You need to record lots of expenses and you need to reduce the amount of income that is actually coming from your business, right?
Okay.
So what you do is you leave the money instead of paying it to your personal, right? You
Yeah.
leave the money inside the business account. Okay? You leave it there.
Okay.
It doesn't get paid to you. This gets recorded as high expense on the personal side, and then on the business side, you still have high expenses, but at least all the money you're leaving in the account. So it's not going to the personal side. You're not getting this income. See what I'm saying? So now this number is going to be very low. And then this number is also going to be very low because you're going to record lots of expenses as well in the business. But anyways, your question is, how do they have loans and all those things? Now that you understand how taxes work, okay,
Okay.
you now need to understand what the rich are doing. Okay, what the rich are doing. Remember what I told you. How do you reduce your overall taxes? Long story short, you leave money in the company.
But so you say that I don't need to take a salary?
No,
Okay. I need to leave the money in the company. Okay.
use a company card to pay for whatever you need, right? So
Okay.
the money in the company, right? That is the moral of the story as it relates to taxes. Okay, that's gonna save you personal. That's gonna help you. But what else is that gonna do? Leaving money in the company. What does that do? If you leave money in the company, that means your bank account is increasing. Would you agree?
Yeah. A lot of money in the bank account.
Yes, a lot of money in the bank account, exactly. So you're leaving money in the company. You're not taking it out as personal. You're leaving it all in there. So it stays in the bank account, meaning this money, this balance is increasing, right? So
Yeah.
what do the rich do? Just leave their money there?
No.
No,
Invest.
exactly. So here's what they do. They say the money that's coming into this bank account, okay, I am going to leave it in there and buy assets. Okay.
Okay.
Assets could,
Properties.
yeah, they could be, I mean, it could be lots of assets. You have properties, you have companies, you have IP, intellectual property, you have stocks, you have bonds, you have like lots of things you can buy that are assets. Okay. Cash
Yeah.
flowing solutions, right? Uh, etc. You can lend money to people, whatever, right? So these are all ways to buy like assets on the books, right? Okay. So
Okay.
so now that you have this bank account accumulating money, okay, so this bank account is accumulating money, right?
Mm-hmm.
Buying assets with that money, okay? From these assets, you're going to have like this asset number one value, 300K. Okay. Then you're
Okay.
second one, third one, and fourth one. Asset number two, this value is going to be 50K. Asset number three, this value is going to be 150K. And asset number four, this value is going to be 20K. Okay. Say, okay, so you have your taxes being saved, money's in the account is buying assets are now being purchased. And when these assets get purchased, here's the thing. What happens when you sell an asset?
I'm paying tax also.
Yeah.
No?
Yeah.
Okay.
Why? Because it's
Because I'm earn money, profits.
yeah, profit, exactly. So if I sell an asset, I make money, I have what's called capital gains tax. Okay. So what's the key to not paying tax? You don't sell. Make sense?
Okay.
You don't
Ah,
sell. So what do you
okay.
do? If you're not going to sell, what are you going to do?
I have like a retainer from the a percentage of yeah. Loans. Okay.
You're going to get a loan or a line of credit that is collateralized by the value of your assets. So based on the value of your assets, you have 350, 400, 500, $520,000. So based on your assets right now, you can
Yeah.
take 520K. Excuse me. What the hell? Okay, you can take out $520,000 loan or line of credit. Okay. So based on that diagram here, you now can take out a loan, okay,
Okay.
against the value of these assets, meaning you never need to sell them to access that money. In order for you to get this 20K back in cash,
Yeah.
how do you get the 20K back in cash? It's stuck in an asset, right? It's in my real estate. How do I get
I can. Yeah. Okay.
You can't
Okay.
get it. The only way to get it is to sell it, right?
Yeah.
And then I
So I
can get it.
don't sell it.
So what I do instead is I don't need the 20K. I'll keep that in there. That way the asset value is going up, right? If I
Mm-hmm.
keep holding, just like you keep holding real estate, all of these asset values are all going to go up. Just like your bank account is going up. Once you own these assets, they will increase. The stock market increases, property increases, Bitcoin increases. Any assets you buy will increase in value, right? So that's what you do.
Okay.
You hold the assets, but whenever
Yeah.
you need to access the money, instead of selling your assets to go and buy something stupid, you take a loan against the value of your assets. That way, there's no income. Okay. There's no income, there's no profit. So there's no tax. Because you're not selling these assets, right? There's no tax.
But okay, I understand what you say. But the question is like when I bought these houses, for example, house. Okay, I bought like 4 houses in this amount of money. The when I bought these houses, the money that I bought the house, it's not like expenses. It's like You
This is
understand what I'm saying?
yeah,
Money,
yeah.
money
Where'd you get that money from? You got that money from the money sitting in your account, which is
Okay.
after expenses. This is after company expenses. This is money left over, right?
It's from the profit.
Yeah.
Okay, okay.
And then that's your profit bank account increasing. This is all still in the company. You still didn't transfer the funds to your personal account. It's all still in the company account. With the company account, you're buying assets.
Okay, okay, I understand. With the profit of the company account, I buying assets,
Yes.
and after I take a loan for if I need something for like I didn't understand like the last part. It sounds good, but I didn't understand like the last part.
Okay, so Michael, if you came to me, right? Or sorry,
Yeah.
if I came to you and I said, Michael, I'm in a bad situation. I need to borrow 80 grand USD.
Okay.
Um, and you didn't know me. You didn't know me. I wasn't your friend or whatever. I told you my story. I'm like, listen, I need 80 grand. Can you lend it to me? At what interest rate, right? Where are you going to lend it to me?
No,
No.
What are you going to say?
no, I can't. I don't knowing you. I'm
Okay,
not
but
believe you.
okay, but let's just say you had enough money. You had lots of money. You didn't know me,
Yeah.
and you want to make a profit, right? Lending to me, right? So let's just say, how would you evaluate whether or not I'm a good person to lend to?
How I can know if you are a good person to loan to?
That I can
Uh,
pay you back, right?
your
If I
what?
if I can pay you back, right?
Yeah, if you can give me the percentage of every month,
I'm
yes.
able to pay the loan back, and I can prove to you that I'm able to pay it back. Then you have no problem to give it to me, right? Plus some interest, so you can make money. Then you'll
Yeah.
give it to me because I can pay it back, right? But how can I prove that to you, Michael, that I can pay it back?
If you have assets,
If I have income, right?
income, and properties and things.
Yeah, but we'll start with income, right? If I have income
Income.
coming in every
Okay.
month from my business, okay, I can no problem show you my income and say, okay, Michael, give me 80K. I make 10K a month, so it'll only take me like 8 to 10 months to pay it back because I make 8 to 10K a month, right? So I'll be able to pay that. That's just my income, right? Let's just say I don't own any properties. Just on my income, I can show you, and you can decide as a lender, oh, do I want to lend this to this guy? He's making 10K a month. Okay, sure, I'll do it, right? So
Okay.
now, what if I also had properties on top of that?
Yeah, I will give you the money because it's look like you can give me back like the percentage.
Because if you don't pay me back, I'm going to take your house as
Yeah.
my house. You understand?
Mm-hmm.
That's why assets are important, because people, banks, lenders will lend you money because you have assets, okay, that you can collateralize, which means they can take it from you, right? If you
Yeah.
don't pay back, right? So back to our diagram, right? These assets, okay, are
Yeah.
going to be in the form, you're going to own these assets because you still own them. You didn't sell them. What happens with assets over time? They go up in value, right?
Yeah.
Okay.
Mm-hmm.
So as you're holding these, they're going up in value over time as you're owning these, right? You're
Yeah.
never selling them. You're just taking out a line of credit against the value. Now, listen, the line of credit is going to have an interest rate. Let's just say the line of credit interest rate to borrow the money is, I don't know, 6% interest.
Okay.
Okay. On the loan, right? So 6% on, let's just say $520,000 times 0.06, that's $31,000 in interest, okay, per year. $31,000 interest.
That we need to pay because we take a loan of 500,000.
Exactly. So now you're paying this interest, which interest is actually an expense. So you
Next
can
time.
bring it all the way back here as an expense and have a higher expense because you're paying interest.
Yeah.
Okay, and when you have a higher expense, what does that do for your profit?
It's make it lower, and after I pay lower taxes.
Lower taxes. Okay, exactly. So now the interest is actually an expense, lowering your taxes even more. But how am I paying this interest? Am I paying it out of my pocket? No. How I'm paying it is I'm taking the cash flow,
Yeah.
okay, from my assets. Okay,
For
these
paying
assets,
like the interest.
my assets, they make me money, right? Not just they increase in value, like we said here, they're increasing in value, but they're also producing monthly cash flow, like a house. So you buy a house, right? House
Yeah.
goes up in price, right? That's the value going up, right? But what
Mm-hmm.
about every month? You put a
The
tenant
rent.
here, they're paying their
Yeah.
rent every month, and your mortgage payment is lower. So the extra rent that you get, that's called cash flow, right? So this cash flow gets reinvested into this fee over here. See what I mean?
Yeah.
So the
With
cash flow from the
yeah.
assets is going to pay for the interest, and the
Yeah.
interest is going to be an expense, which is going to lower your profit, which is going to lower your taxes, so you pay less in taxes, and the cash flow
Mm,
is paying the interest, and the value is going up. So this loan is free.
I understand. Yeah, I don't pay like the interest because I have like less expense. I pay less taxes. So I understand what you say. Okay. It's like
Yeah.
I have a loan for free because of all these things.
Yeah, you have a loan for free while owning $520,000 in assets. Those are going to go up every year. It's going to go from 520 to 550, from 550 to 590, 590 to 600, right? It's going to keep going up, right?
Yeah.
And on top of that, you have access to all 520,000 now. I have the cash in hand right now. So not only
Yeah.
do I own those assets that are growing, but I also have the cash, right, in the form of a loan that I can spend on more assets, right?
Yeah. So you buy more assets with this money of that you loan,
Yes,
but
but you need to make sure that the cash flow from these properties, right, is already paying the interest. Then yes, you can get a brand new, you can buy another 4 houses and then do the same thing, get another loan on that. Another 4 houses, another loan on that. But you have to make sure each time that the cash flow is paying the interest.
so but if I will buy like more for houses, the bank will see that I have a loan. They will give me the option to buy more for houses. You
If
understand what I'm asking? If
yeah,
I
yeah,
have a loan from the bank, so how they can give me another time like 500,000?
yeah, that's fine as long as the income makes sense, right? If I'm, for example, if I'm making $100 million a year and I already have a loan for a mortgage for 800,000,
Okay.
so what? I can't get another loan.
Okay. If you have like a lot of income in the company, so we can take more loan.
Either you have a lot of income or you have a lot of assets, one or the other.
I understand. Okay, okay, I understand. So yeah, I understand. So yeah, they say that okay, it makes sense because Mikael and Lior bought like 4 houses. They give them for the rent. They give them money. So if there is a problem, so we will take from them the houses and we'll have the money for of the loan.
Yeah,
Okay, so it's
exactly.
like a cycle don't
Loan,
finish.
the loan goes from like, oh, yeah, there's a loan to there's no loan because there is no loan because it's collateralized by the houses.
Yeah,
There is no
yeah.
loan because where's the loan? If I don't pay you back, then you take my house. So there's really is no loan. It's just I'm taking the value of my assets already and I'm transferring them into loan value. That's it. So I can use the money to do more shit, not pay taxes and buy more assets.
And this what you do? Like
Yeah.
which assets you buy?
I have this structure, okay, but the structure I have is like this, but a little bit more advanced. The one I have is like this. This here is my business.
Yeah.
So we'll make this like a fucking gray is my business, white is my personal, and then this one is actually my holding company. Okay. And my holding company owns
Okay. You have some companies.
this is like, let's just say I call this one variance. All right. Holding company owns this. And this, I'm not buying the assets inside variance. What I'm doing for even more protection, and I recommend this too, is you make another company for your assets. So this can be, let's just call it property company. This is your company that all your properties are going to be written under this company. They're going to be owned by this company instead of variance, right?
Okay.
That way, in case variance gets sued, right? The properties,
Are safe.
they're here, bro. They're not in here. Make sense? They're not, you
Yeah.
can't, right? So that's why you need to have a holding company that's going to own the property company and your business. Okay. And if this company owns these two, right, then this company can do whatever it wants with this profit, right?
Yeah.
Because this company is making its profit, this company has some profit, but this company owns both. So this company controls what we do with the money, right?
So they
So
move.
this company
Okay.
can say like this. Okay, this company is going to say, okay, the profit that I made in this asset variance is an asset of this company, right? So this company says, okay, the profit that I made in this thing I own, I'm going to transfer this profit to this company now because I own both. So I'm going to do an internal transfer. Make sense?
Yeah.
So now the money goes from here to here. Okay. And it gets transferred like this. This is how I'm doing it. Okay. So money is getting transferred to this company. From here, this company, you have all these details we discussed, which is buying
Okay.
assets.
But the best assets that you buy, it's like houses, it's like properties, or you buy like
Yeah, you have multiple. You got to get stocks, properties, crypto, right? But this is how you want it. So this is actually how it should be. So I'm actually going to remove it from here because how it should be is like this. You have your holding company owning these two, okay? And the money made from this is going to be transferred over here. And then from there is going to be paying for all of these things that you own. All your assets will build up here. Right. And if since you have Leor and Michael, how you guys should do it is you guys should have like this. Michael has his own holding company. Okay. Leor has his own holding company.
okay.
Okay. And then Michael and Leor's company are partners and they own both of these. Okay. So 50-50. Okay. These two companies 50-50 own these two, right?
It's not the same thing, but like for owning like the 50-50 this company, like the old company and the other company of variants, it's not the same.
No, because you guys have your own holding companies, so you can transfer. Like if Michael owns 50%, right, of variance,
Yeah.
Michael can take 50% of the profit, and Michael can put it in his own property company that he has on the side.
Mm,
See
I
what I mean?
understand.
And
Yeah.
Leo can take 50% of the profit that he owns inside variance, and he can transfer to his property company that he has.
Yeah. So it means like that's okay. 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 I understand. I understand.
Make sense?
Okay. Yeah. Makes
Nice.
sense.
That's how the fucking that's how the rich are getting richer.
It
This is
sounds
how
good. It sounds like smart.
it works. Yeah, this is what you need.
It sounds smart.
It's the basic version though, like a little bit more complex, but yeah, it's
And
this is what you need.
like what you if you have like experience, you buy like houses in Canada and US.
Yeah,
You have like you know like the percentage of rent and everything.
yeah, exactly. Yeah, I do.
So what you know to tell us like what is like if it's a safe property buying and what is like can be like the percentage per year.
So it really does depend on the situation. Each like deal is going to be different, but you can figure out if like a deal makes sense. You know, I don't necessarily have the time right now, Michael,
Okay,
uh,
it's okay.
but yeah, we can definitely talk about that. Like, there's like I could show you how to evaluate real estate deals. You know, determine if it's a good investment. Right now, let's make some fucking money, right?
Yeah, yeah,
So,
yeah.
you know, and then we'll talk about these things later when you have money in the door.